Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
We back. We back.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That is Fat Man Zoom. We are back. The stock market is crazy and chaotic. We made it our mission to help you own it. Fat Man Zoom, hit him with that top five. The starting five.
Starting five: Sam Cisneros, Mysterious Gal, Sean Ethier Arfin, and Victor Toledo. To you, my friends, I say thank you. Now, sorry, I got a little bit of a reverb, but that's my fault. We're straight. Now, what do you say we do some thumbnail poses? A little pose off, as they say in the hood.
Let's do it. Let's do it, dude. Have you seen that guy on the TikTok?
No.
Oh, man.
Flash crash. FANG going to the moon. Hold on. One more time, to the moon. Solo.
Okay.
Zooming. What the hell is that?
I don't know what that was.
What the hell is that? Zooming.
Oh, see, that's a good one. That's a good one. Looking the wrong way, but
No, I got to look that way. We got to fix this angle, too. There's too much of this. Actually, this is the spot. I mean, I could do it this way.
Yeah. Let's do it that way.
Zooming.
You gotta look at the camera though. Look at your camera.
Hold on. I gotta find.
There you go.
All right.
All right.
Amazon all-time highs. You love the double finger points.
I do.
Apple 52-week highs. My account is bathed in red. All right, that was good.
All right,
Those are some good-ass thumbnails, folks.
As you can see, the soundboard is looking a little bit different. Hopefully we sound okay. I've tested it to the nth degree, and hopefully everything sounds good. You guys let us know how we're sounding, how we're looking. Yeah, feels good to be back after our one-day hiatus, Fat Man Zoom.
Yeah, it was weird.
It was a weird day yesterday.
I noticed a lot of you guys throwing in there what's going on in the market. It's red, flash crash, whatever. For certain things, it's definitely been tough for some people.
Yeah.
Man, AMC got its ass handed to it today, down over 10%. GameStop over 5%. Clover has had a run of bad days. It's down 2.5%, but not after down 14% yesterday.
Yeah.
Memes in general have been beaten up, but other stocks have had a tough time. But the overall market hasn't experienced that as well. Again, sort of the case we talk about with just being, having diversification in your portfolio.
Yeah.
So.
Yeah, I mean, it's funny because all the indices are green right now.
Mm-hmm.
So I'm sure it's obviously a lot. If a lot of you guys are like crazy red, it's another day to look at your portfolio and kind of evaluate, see what's going on there. Because if you're too heavy in one thing, it's usually what ends up being the case. For me personally, I'm red on the day.
I'm red on the day too, for the record.
I'm red this week. It's been a rough week, but we saw this coming. We talked about this in late June about a potential, choppy market, for July. The average rate of return for July after the S&Ps had 13% plus moves for the first half of the year is 0.4%. So it's not, but the good thing is that strong markets stay strong usually, and I'm still very bullish on the last half of the year. But these are some good opportunities to grab some dips. I ended up taking my marathon oil profits and rolling them into OIH as it came down close to the 205 area, just below 205. I feel good about where I'm at. And Apple just went crazy. I'm loving how Apple.
How much are you up on Apple?
I'm up on Apple around 4%.
Cool.
So doing pretty good.
Man, seems like my move of having 70% cash don't seem so dumb now, does it, people?
Who said it was dumb?
Nobody said it was dumb.
Okay.
you might have been like, oh, you should be spending that money.
Well, yeah.
I was.
Did you spend that money?
I started spending it
Yeah,
today.
that's what I'm talking about.
For that.
Yeah.
I'm glad I didn't spend it the day we talked about it. My ass would have been handed to me.
Well, the day we talked about it was Sunday.
Exactly.
Or Monday, I should say.
But no, I mean, it's to the point of, it's just, I hear more and more people, and you weren't the only one, but I think people have these hard and fast rules, and the reality is, my strategy is different than other people's strategies.
Yeah.
And I was so happy, like, I am red on the day, which I'm going to get into things that are going to be red. But one of those things where, like, I feel like people are still trying to find this one size fits all thing. And you got to understand your strategy, how you work, your risk tolerance, and all that other stuff, because I don't know many people that would have been in 70% cash. And I feel like I was speaking a little bit of a different tune than some people were speaking.
Yeah.
Even yourself, I feel like you're rarely in that much cash, which I was considering getting, like I could have been out even closer to 80, 90% just because a lot of my green positions were up 20% plus.
Yeah.
So I said this morning in level 3, I want to view this as the second half of the game. So we're getting into the second half. My stops were halftime, have some cash to spend, and it's been a great first half of the year to date. But right now starts sort of the second half, which is a new game in my mind. So my hope is I can, have equal performance. Again, it's always double market return. And so if I have a 5 to 10% second half of the year, that's my expectation. I would hope that it's better than that. And I think we're going to have a really strong second half of the year, but I just want to continually have those consistent, like you talk about, base hits. I just want to keep getting base hits.
I mean, that's how you win. Small ball is how most teams end up winning games anyway. At the end of the day, it's about getting the W. So I definitely think that your approach has been great. And looking at my own portfolio, I think that, obviously I was in a little bit heavier than maybe I should have been, but I still saw this coming. So it's kind of one of those things where it's like, I knew that we were gonna be in for a bumpy July. So do I just take money out of stuff that I'm in, or do I just ride it out and see where my chips lay? And so then I ended up kind of taking a little bit more of the latter approach, but still had a bunch of money to put into some stuff. And that's why I ended up loading the boat on Apple.
Yeah.
And so that seems to be working out pretty good. And I think the energy is still going to lead the markets in the last half of the year. I think it's going to be energy FANG. And that's why, and we're going to be talking about some other FANG stocks later in the show. But I mean, it's just, I think when you look at the S&P 500, why it's moving today, why is it green today? It's not because of any of the value stocks today. It is all big cap tech that has been leading the charge here. So I think that's probably going to be the name of the game going into the second half of the year. But, you're going to have to endure a little bit of the roller coaster ride that is July right now.
I think the hard part is thinking about how to scale in with the cash you have. Now I'm at about 28%. I spent a good amount. I mean, I added to Clover, which I wasn't planning on, and my philosophy behind that was really due to the fact that I felt like there was a specific reason it was moving down, and I felt it was unwarranted. So when we talk about discounted opportunities, I got into that. And, I talked about this before on the first Clover move. I'm committing to just silencing the noise, and it's harder. I think it's harder for us because we are basically we put everything out publicly. We're one of the few places that you can see our portfolio that you literally, we have to say everything we're doing. We don't have to, but we've committed to doing that. And so it's harder when people know those moves. Like if you're in the confines of your own home and nobody, and I'm only bringing up the good shit I do, not the bad. You know, I could buy 12 positions and I could tell you the one that's up 40%.
Right.
It's easier when you're only cherry picking those. That was hard for me the first half of the year because I was like, I think I could have performed better if I wasn't putting everything out on Front Street. So I got to do my best to not worry about perception or noise or what people say on you're crazy about this, you're crazy about that. Or some people going to think I'm crazy for adding and going back full position on Clover. Sure.
Yeah, I'm sure.
But I've got to trust what got me here and what I've done for many, many years in that how I treat the investments and just how I valued companies in general. So that's going to be interesting to see. But Clover was obviously one. Drive Shack I added to. Car Lots was part of my plan. This is my final ad. So,
I thought about Car Lots, yeah.
So yeah, Car Lots I got in at like 484 for my final ad. Not sure what my average is right now, but right around probably a little over $5.
Yep.
But then I got into a little bit less speculative. I added to Delta. Delta is one I've been really bullish on. I know I'm going to have to wait a little bit, but Delta has earnings next Wednesday, probably going to be on Stock Watch Sunday.
Yes.
And one you put on the watch list, AMAT, I haven't gotten into it, Applied Metals. Is that what it is, Applied Metals?
Applied Materials.
Materials, yeah. I'm thinking about getting out of my AMD position, which I'm up like 17%. Not anymore because it's down. But I'm up like 15, 14% on it.
Yeah.
I'm thinking about flipping that into AMAT and then flipping that into NVIDIA after July 20th, whatever the sell-off occurs. So I feel good about where I'm at in those things. And I think there was one or two other things I added to, but I certainly was spending today. But the reality is this could continue.
Yeah.
I hope it doesn't, but I don't want to be at the beginning of the dip. So I have 2,700. I will actually be, I add 10% of my original investment. So I'd add 500 every month to that account. So I'll have that $500. So that'll be about a little over 30% cash that I'm going to sit on and let this week play out. Probably won't add to anything just yet unless I want to get into that AMAT, but that's cash I'm going to use that I'm going to flip.
Yeah, Applied Materials, if you guys don't know, that's a stock that essentially engineers a lot of materials and parts for a lot of the major chip makers, most of them. Name a chip maker and AMAT is involved with them. So that's going to be a good one, I think. I ended up putting that on the watch list this morning. But as far as I'm concerned, my approach is a little bit different. I'm staying true to the stuff that I have strong convictions on and not really deviating from that. I may add to them a little bit. Penn National is fucking wrecking me right now.
Yeah.
It's down to $70 a share, and I think that it could very well go down to 66. I'm very well prepared for that, but I'm not going to sell it at this point. There's just no point.
Yeah.
So that's the one that's the really frustrating one. But all the other ones, I'm okay on. Obviously the Apple trade's been doing really well. I'm on in OIH. I was not expecting OIH to come back to retest those low $200 levels. So I viewed that as a gift, which is why I ended up rolling some money into that. So I feel really confident in that. And so I'm just taking the approach of sitting on my hands and just waiting out July.
I think so I'm glad you brought up July because we're in July 7th. I know a lot of you guys talking about catching the dip in the bottom or whatever. If it is going to be a choppy July, depending on what you think, what I try to fight against is that one big red day and feeling like I got to get in now. When that one red day can turn into 6 out of 7 red days or whatever.
Yeah.
And so that's the FOMO working with you in catching a dip. You still got to exercise that patience. And I have to remind myself as well to exercise that patience and be disciplined and be like, this ain't going to be the only red day. And even if it is, what is the worst that could happen? That means that the stuff I'm in gets a little bit better, turns a little bit green.
Right.
So that's the one thing I worry about. And I think about for myself, and I think about in the community is like, we've seen this happen in the past. We might have a bit of a choppy few days, even weeks,
right?
Maybe months, who knows? But like if it's days or weeks, kind of like spending all the cash too soon. Like it's no different than a specific stock as well, because I have 70%. I actually am not happy. I wish I would have been at maybe like 35%, but like even scaling in and how I use that cash and not spending it all in one day, I think there's a level of irresponsibility in that.
Yeah, absolutely. And I mean, to your point, like we're in the first 7 days of the month. There's a lot more roller coaster ride that we could potentially endure. Now, I will say that next week is when we see earnings from, like you were mentioning, Delta, but also the banks. That's going to be it's going to be a big start of the earnings season next week, folks. And so we got the banks coming in, and I think that could be maybe potentially a turning point. We'll see as far as, what their earnings look like. How much are they going to give back to investors? We talked about how they passed the stress test and how they were looking to buy back more stock and increase their dividends, all that good stuff. Are they going to give us more positive feedback? If that ends up being true, we could see a pretty decent sized shift in the markets to the upside. Also, the week after that is when the FANGs start to report. So we'll hear from, I think, Apple, Amazon, and Facebook the week after. So it's going to be interesting to see how the last half of the month plays out. But I think until we start seeing some numbers out of those major corporations at the start of earnings season, it's going to be pretty bumpy.
I wouldn't mind a cool down, to be honest with you, because I feel like it's going to be a monster August, monster fall in general.
Yes, I do too.
And so we'll see what happens. But stay tuned. And since you brought up Amazon or FANG, let's start the conversation. Where do you want to begin?
I want to begin with you hitting the like button first. If you guys could hit the like button if you're enjoying the stream so far, we certainly would appreciate it. There's 113 of you guys hanging in here and 19 likes. It's kind of sad.
I got 20.
Oh, now I have 20.
Oh, okay.
I'm a little delayed, I guess. Either way, still low. So yeah, let's go ahead and talk about Amazon. It has been an absolute monster. And so I'll let you kind of talk as to why we've seen Amazon. I think there's a couple reasons why, but the big main reason, why is Amazon moving this week?
What's wild is, so what happened this week is there's a $10 billion contract that the DoD had with Microsoft. Now, Amazon used to work with DoD. They lost the contract to Microsoft, and there was this litigation surrounding how Microsoft obtained this contract, particularly around the previous administration, and they felt like the DoD was swayed to choose Microsoft. Yeah. And so there's this ongoing litigation. And as far as I understand it, the DoD essentially was like, rather than try to deal with this litigation, we're going to pull out of this $10 billion contract. We're going to reopen the RFP, the request for proposals, and we're going to select a new winner of the contract. And they stated that pretty much the only two companies capable of honoring this contract would be Amazon and Microsoft. Yep. So Microsoft currently had it, lost it. So you would have to think, and the market tends to think, that Amazon should win this contract. Now, that doesn't mean that it's a foregone conclusion that it'll be one of those two. It just means it's highly likely. DoD is still going to search for other companies that have the capacity to do it. But if you're a betting person, it's probably going to be Amazon or Microsoft. Yep. And so that was the catalyst that came this week. And we talked about it, and you'll show on the technicals on the chart. I mean, Amazon has really been sideways for a year. Yeah. And kudos to the patience that anybody in our crew has had. We've talked about this. We felt like this needed a catalyst, but we felt like this was a $4,000 stock. We thought the split was going to be the reason that it set it off, but this $10 billion deal is certainly enough. And if they get that deal, it'll be interesting to see how the market reacts. Is this baked in, or will it continue to run? But it's looking really good.
Yeah, man. It just needed something to get up over that $3,500 hump. And you guys can see here, this is on the daily chart here using our Webull platform. You can see all the way back in August, it hit that 3,500, and then you guys know what happened in last September, and it's retested 3,500 several times. This time back in May, I actually put out a video on my own about how I thought it was going to break out here. Unfortunately, it did not. But ever since then, and ever since their latest earnings, really, this has started to make that move back up. And then it retested their 3,500 and consolidated here. You can see this is Fat Man Zoom, your favorite
cup and handle, baby.
Your favorite bullish pattern, which is a textbook cup and handle pattern. So then came up here, and then obviously we got the catalyst we needed, and just a monster breakout on Amazon. Had highs of 37, 34, 20. This has just been a crazy move, man.
Well, you know what's wild? Where What was July 1st? Can you just click on July 1st?
Yeah, July 1st. Right here. So it's just barely red on the day on July 1st.
So I got lucky. That was the day Mini Zoom. Remember I said I rebalanced and I got Amazon for Mini Zoom?
Yep. That was Friday, right? Last Friday?
Lucky devil.
Yeah.
It was on Friday. So, Fat Man Zoom special, Amazon, we've loved it. We continue to love it. We've talked about the absolute dominance of e-commerce, and why not get the top dog? Amazon is the clear leader. Another one that I don't want to stray too far away, but we'll come back to Amazon really quick. Big C, which is another e-commerce play, was on Stockwatch Sunday. For those of you who were able to capitalize on that had a great move yesterday and had another great move, a phenomenal move today.
Yeah.
But that being said, e-commerce is here to stay, and I think what we said was there was some instability around it the first half of the year. I think the second half of the year is when these companies are going to start realizing, the market's going to start realizing like e-commerce is going to continue to dominate. Yes. And I think this is the beginning of that story for e-commerce.
I mean, how long have we been saying that coming out of the pandemic, the investors and analysts that thought that, the brick and mortar was going to come back with a vengeance and that e-commerce was kind of dead? I mean, how many times did we say that habits were formed during the pandemic and they're not just going to drop off because people can go out and go shopping again? I mean, did some of the same store or in-store purchases go up? Yes. But e-commerce didn't slow down one bit.
Yep.
Not one bit.
Absolutely. And speaking of Amazon, which has had a monster run, Brad alluded to Apple. You can't forget about FANG. And that's one of the things I wanted to bring up was the FANG conversation. We had mentioned, it must have been a couple weeks, if not over a month ago, we talked about where the attention lies and looking, we're not playing checkers, we're playing chess. We're looking for the next move or 2 or 3 moves ahead. And while everybody's focused on whatever the headlines are, can we figure out what the headline 2 weeks, 3 weeks, a month from now? And FANG pretty much set up perfectly for us.
Yeah.
And FANG is absolutely on fire, bro. Apple, the story of Apple. We've talked about Facebook sort of led the way. Google led the way. Alphabet led the way.
Yep.
And then now we're seeing Apple have a surge, and I don't think that's runs over. I want you to talk about that move that you think is going to happen. And then lastly, Amazon, which we said obviously did well. Netflix is the only one that's lagged, but I'm actually becoming more bullish on Netflix, and I think the second half of the year is going to be great for Netflix.
Yep.
From a competitive perspective. There's a bunch of reasons why I'm very bullish on Netflix that I'm going to save for a different time.
Yeah, I mean, Netflix is going to have its day. I think it's later in the year, but I think that you're onto something there for sure. Right now, though, it seems to be at the forefront is going to be Apple, Amazon, Facebook, Microsoft, Google, really all of them except for Netflix at this point. But they've all hit all-time highs except for Netflix. So Apple has yet to hit all-time highs, I should say. It's pretty damn close. 4509 is the all-time high for Apple. It is at 4452. We've seen highs today of around 144.89. So very, very close to all-time highs here. Now with Apple, I mean, I mentioned this in Stockwatch Sunday, Fat Man Zoom, and I had said that, we have earnings coming up and we could very easily see a run into earnings on Apple. We also have the iPhone 13, which is becoming more and more highly anticipated. So lots of times historically, we see a pretty decent run going into the release of that. And then also, just the fact that it's lagged behind the S&P so much. I mean, there's a lot of things that are going for Apple at this point. So we get a break over that 145.09, and we can see something similar that we saw with an Amazon type of move. And these are going to be the leaders going into the next half of the year. I think it's them and energy. It's going to be a foot race to see who actually outpaces the other. But I don't think you can go wrong with being in any of the FANGs at this point, and that includes Netflix.
Yeah, technically, I mean, we've talked about not to fear all-time highs, and we've seen stocks, and Apple very well could do this. When it breaks the all-time high, that could set it off to continue to run.
Yeah.
But it looks really good. Apple is one where, it's, again, you be patient. I think there's certain stocks, and this may get confusing for some people. There's certain stocks where it's like, why are you hanging on to it? Why are you adding to it? Well, I don't know how, why it would make sense to try to time Apple.
Right.
It's like you get in, as long as you're patient, it'll make its money back. You still scale in strategy. I still believe in scaling strategy. I wouldn't necessarily advise going all in on it, but it's one of those where like dips for sure you should be like chomping at the bit for. You should be excited about dips for a company like Apple because they're going nowhere.
I actually read an interesting article this morning about Apple, and just if you had invested $1,000 into Apple at the same time that Warren Buffett bought Apple. Now he unveiled a 9.8 million first quarter purchase of Apple shares on May 16th, 2016. So we bought 9.8 million shares of Apple back in 2016, and has made an insane amount of money. The average price was $27.25, and so. Obviously, right now we're approaching 145. So if you bought $1,000 with Buffett, an investor who chose to buy it on May 16, 2016, you'd be up nearly 600%. The value of that would be $59.54 and 74 cents with a $1,000 investment. So that's crazy, and that's just since 2016. Yeah, and we've talked about this before about how owning Apple, you literally could just buy Apple and just keep putting money into it, and have the patience and the discipline enough to just continue to put money into it and not worry about it. Making an average of 30% a year, just about. Yeah. Compound that over 30 years. I mean, we're talking stupid money. Yeah. Stupid money that you can retire on and feel comfortable living off of for the rest of your life. And so it's crazy. I know we talk about investing in all kinds of stuff, but you literally could just do that with Apple with confidence.
Well, we don't talk about this a lot, but we have our Dividend bot.
Yes.
And the Dividend bot, we wanted it to have some wrinkles in it, and one of the wrinkles is dividends you typically think about as value, right? Like growth stocks don't really give large dividends, if any dividends. Like a true growth stock won't give dividends. Right. And so Apple gives a very, very small dividend, so we figured it qualified. But we added Apple in, not initially, but we did add it in. So the Dividend bot purchases Apple, and I think you said your bot got it at like 129, is still in it. Yeah. But again, like we added it in not when Apple was in favor and it wasn't looking great, but hell, it's worked out for us, and hopefully people that have the Dividend bot should be doing well with Apple.
Yeah, we added it in March, I believe. So I have exposure to Apple everywhere. I have it in my personal accounts, obviously the Dividend bot, and I also have it now in the Webull account as well. So it's everywhere for me. I'm still a green bubble, still have the old green bubble phone, but no, I think Apple is still just one of those stocks you just continue to hold on to, and it's just going to continue to deliver. There's no reason to believe that they won't. Earnings every quarter in and quarter out, they just deliver. There's nothing else that you can say about them. And we try to find bearish cases and everything. It's really hard to do that with Apple.
Yeah. I mean, there are many people that trade and do really well trading, especially short-term trading, day trading, short-term swing trading, whatever. Yeah. I just enjoy doing it because of the channel and content and whatever. But I think it's safe to say you trade a little bit more than I do. Yeah. I'm making less frequent trades, but it's funny because we both have multiple accounts. I have 3 sort of main accounts I use, and they all serve different purposes. But my Batman Zoom account is my account. That's like the one for me, and that's my investing account, long-term investing. Yeah. But it's funny, like that now has 9 positions in it, and 7 of them don't change, which are the Fat Man Zoom stocks. Yeah. And my public account is outperforming it only by like 4 or 5%, which is like cool. It's outperforming it, but all the work I put into that, whereas the Fat Man Zoom account, I never like.
You never touch, right? Yeah.
Maybe once a month I'll like do something, max once a month, and it speaks to what you're saying. It's like those are all industry leaders. Those are all stocks that are going to be forever, and those are all where I'm just adding to them, essentially adding the dips or dollar cost averaging on them, and it's just funny how it works. Like, I'm still kind of in the same spot for both of them.
Yeah. I mean, imagine if that $1,000 illustration was 10,000 or 100,000 that you put into Apple in 2016. You're looking at $600,000 for a $100,000 investment into Apple in 2016. That's wild. Yeah. That's absolutely wild.
Yeah. And 2016, it wasn't like it was crazy to think like Apple was that was a buy and hold forever stock, right?
Yeah.
Like buy, don't sell. Like it wasn't like that was like 1980 when it was publicly traded and you're like, okay, I don't know what's going to happen with this stock.
Right.
They were crushing it in 2016.
I think that just goes to show, there's a lot of people out there that are like, well, I want to make sure that I'm getting in at the bottom. Even with something like Amazon, that it's sitting at 3,700. I mean, imagine that you looked at Amazon at $1,000 and you're like, well, it's up too high. I don't want to get into it right now. I'll just wait, until whenever, instead of just averaging yourself into something like that. There's something to be said for that. Like you would be up a considerable amount if you just bought it, even no matter where it was at, because these are companies that are just going to be around forever. And in my opinion, I think as crazy as it sounds, Amazon is still very early in the stages of growth, and they still have plenty of room to go as far as e-commerce is concerned. And we've looked at some of the consumer spending, that the majority of consumer spending still gets done outside of e-commerce. So there's still a lot of growth opportunities for Amazon and even a lot of the other e-commerce platforms for that matter. But these are companies that aren't going away. They're only going to continue to go get better. And the growth is still going to very much be there.
Well, and what it also speaks to is the power of incremental compound.
Yeah.
And incremental growth. And you look at stocks, pull up Costco. You look at Domino's Pizza.
Yeah.
Costco, even Apple to a certain extent. But if you guys remember, when we brought these to the channel, they were not really doing anything. They were kind of dipping a little bit, and they'd have like a 0.5% pop here and there. They didn't have the 5-10% moves that everybody wants. But Costco's at $400. When? Like when the hell did this happen?
Yeah.
It's just been on a nice little steady uptrend, and it's these stocks that and that's also a dividend stock as well. Like they're providing opportunities, and Domino's was the same thing. We're like, man, this should be doing better. And it's just, it'll have a 0.5% one day and then a 0.25% down and then another 0.5% or 1%. And it's just like steadily stepping up.
Yeah.
And you don't notice it in the moment, but all of a sudden you turn around after 3 months and you're like, oh shit, we're at all-time highs.
Yeah. Cause I mean, if you look at this chart, guys, if you looked at this chart, you probably would assume that the bottom of this was 2020. Mm-hmm. It's not. It's March of this year.
Yeah.
It went all the way down to $300 a share and now sitting at 406, because I don't know who was thinking that. I mean, we talked about this, though, about this being the cyclical rotation of people leaving the stocks that outperformed during the pandemic, and they were going to buy value stocks, and that's fine. But, I mean, Costco is still, in my opinion, a value stock. Wouldn't consider this a growth. But, I mean, this is what happened when the rotation took place. And then everybody was just like, oh, shit. Costco's not going anywhere. People are going to continue to spend even more money now they can go back in store and everything like that. So that's why it's continued to move up. Their latest earnings were incredible. You can see how this had a pretty decent sideways channel and now has broken out of that. But yeah, man, Costco, Walmart, Target, the big box stores, they're going to continue to do well. And if you think that you missed the boat here, folks, if you think that you missed the boat on some of these stocks, you haven't. I think that there's still going to be monster growth in the last half of this year on a lot of these staple companies. If you're using them every day, or if you're, if it's part of your life every day, such as an Amazon, Apple, what have you, chances are it's probably going to be something good that you can rest your laurels on as far as investing in for the last half of this year.
Yeah, absolutely. And I think it speaks to balance in your portfolio with specs. And so for me, just as an example with my Fat Man Zoom account, that's 7 stocks. And then I give myself 3 speculative stocks, so essentially 30% of my portfolio or 30% of my positions.
Yeah,
could be that. I don't always have 10. I don't always have 3 speculative, but it still remains. There's this core piece, and there's got to be room for that in every portfolio I have. There's got to be room for those unsexy, but those singles, the single hitters, right. Because that's what's going to get you through the long term. Because if you keep chasing these home runs, yeah, you might have a good, couple weeks, couple months. You can even have a good year, but it could also work the other way, and that's dangerous when you spec enough. And I even, as we're talking, I'm even questioning myself, like, okay, am I too spec? Too heavy as far as position size
speculative
for spec, and so. Those are all things that constantly have to be considered, and you don't realize it. You just start buying things, and then you look back at your portfolio, and you're like, oh, shoot, I'm a little heavy on this. That's why it's always important, like on a frequency, once a month, looking back on your portfolio and just looking at it and saying, okay, where are my position allocations? How am I leveraged? How's my cash? How are my industries? All those things need to be taken into consideration, and maybe we need to make that more frequent as part of what we're doing is like rebalancing, like creating content that reminds people, because we do it, but we don't always bring it up.
That's a very good point. And I still have speculative stuff as well, but I think it all relates to what I anticipate the economy doing in the last half of the year. That's why we love Drive Shack so much, right? I mean, we love Drive Shack even though it's a $3 stock, because people are going to be getting out and doing things again. And golf we've seen, reports about golf being like at all-time highs as far as interest is concerned, people getting involved in it. So you look at something like that. And I think it's also important to what you're saying is looking at speculative plays, but understanding the meaning as to why you're buying them. I mean, I get it. People have made money on AMC. People have made money on GameStop, all that good stuff. But you look at something like Drive Shack or Car Lots, something that actually logically makes sense that could actually have a decent move is also very important to make sure that even though you're in something that is relatively risky, looking at it from a bird's eye view, saying, I could see how this could potentially blow up, and here's some reasons as to why, not just because, I don't know, social media crowd bought into it.
Well, and speaking of that, the reasons, and we talk about the catalysts, looking for catalysts, but we talked about the hubs for Car Lots. They just announced, so it was, It was California, Missouri, and Colorado were the three, and then Richmond was expanding.
Right.
They announced yesterday that they're adding a second hub in California, and the stock's down 5%. Like, those are the opportunities I'm looking for. To me, it's like they're in growth mode.
Yeah.
I really like their model, and we never even talked about this, but I think the model's even a little bit more different than you realize. Like, because you talked about fleets.
Yeah.
It's way more than that. Like, essentially, they're CarMax, but they don't ever pay for the cars. They're just the middleman.
Yeah, okay.
And so, like, you can sell if you wanted to sell, like, your Jeep, like your old Jeep, you wanted to sell it, they'll hold it. Like, you can either just list it virtually or they can have it on site, but they never own it. They just pay, like, essentially a holding fee, and then they get another fee if they sell it. It's just a flat fee.
Like a consignment shop.
It is exactly that. It's consignment. It's cars on consignment.
Yeah.
And so I love that for various reasons from a business perspective and an overhead perspective. But, like, all that growth to me is crazy.
Yeah.
I think the question is, what is it? What is the value of the company? That's what you have to determine. You can't just look at $5.
Right.
You have to look at the share structure and see the market cap and be like, okay, what do I think this company is worth?
Yeah.
And so that news just came out yesterday, and I'm like, that's why I felt okay continuing with the plan of adding under $5.
Yeah, I like it. I like it, man.
The last thing I want to close out with, and if you feel free to add anything, but I want to talk about Zoom. Zoom has been an absolute monster, and there's a couple of things that could be at play here, and I don't know if there's anything definitive. I don't know if you know anything definitive on Zoom, but Zoom has been on a monster run, had a little bit of pullback today, but went to that 400 mark that we've been talking about technically, and I think it's going to continue. I feel confident it's going to continue. It's in my public account, and I've been doing really well on it. I don't have any plans of selling it. I'm probably up like 14% on it as of right now. However, it's had just a great move, and for as long as it was out of favor, obviously during the pandemic it was running, then it became out of favor when you had the rotation, and it seemed like it's had a challenge coming back, and I think that's mainly due to the rate of growth. I mean, it had massive, we're talking about over 400% international growth, triple-digit percent year over year, pretty much in every single category.
Yeah.
And so I feel like the market was concerned, like, can you keep up this growth, especially as we reopen, as you mentioned. We've said yes. We've always believed the answer is yes to that question. We believe Zoom's going to continue to be around, and they're actually really evolving into other things. But what do you see on the chart for Zoom, and how do you feel about Zoom, and where could it potentially go?
I think that Zoom has gone over $400, and I think that was a really pivotal price point for it. The real test, I think, is going to be around 410. But man, ever since the bottom at 273, this has been like one of the most organized upward channels.
Yeah.
I'll just draw this out here. We could draw this trend line here, and it looks so good. From the bottom at 273, it has been very, very organized. And I think that you look at something like this, and there's not much stopping it. Other than, maybe a poor earnings report, but we've heard from them already. They've upgraded their outlook in spite of the pandemic. This looks great, man. This has been in a really good ascending channel all the way up to $400 a share. Now, if this somehow breaks out of this trend to the upside, we could see some pretty volatile movement. But I'm looking for Zoom to not have the same kind of movement we saw during the pandemic, where you can look back here and see how volatile it was. It was just all over the place. Talk about, I'm going to get rid of this here. Talk about choppy, but this thing was just all over the place. And this is the most organized that I have seen Zoom probably ever since the stock IPO'd. So I really liked it, the way that this is moving. And my hope is that this nice organized type of trend continues, and we see a lot less volatility out of it.
Well, and what is that, the 200-day that it's really that it's bouncing off of right now?
Yeah,
hopefully
so this purple line is representing the 200-day moving average. So it just moved up over that. Obviously, another good bullish sign that if it's up above the 200-day moving average, is pretty good probability it's going to continue to move. So it just looks really good from where it's at right now. The strength here is remarkable. And again, going back to what we said before, I don't think that this type of move is over. Maybe looking at it on a red day and taking advantage of a potential dip, but to think that you missed a boat on Zoom, I just don't think that that's the case.
Yeah, Arfin says, I think the variants are also helping Zoom with other countries going into lockdown. That was the other thing. I do think that we've talked about the Delta variant, and we're largely in the clear as far as the U.S. is concerned, and even internationally. I think we're in the clear as far as COVID. Like, I'm not worried about another whole shutdown in general. Yeah. But you got to also take into account other countries as far as whether it be supply chain, just like vaccine distributions, or simply just fear or whatever it may be that could really help move back into some of these COVID stocks that could do well. And we've seen Zoom do this. We've seen Peloton do this. Those stay-at-home plays kind of have a little bit of a bump. I think we're settling out a little bit. But, yeah, that's certainly a factor that I think that's a play for Zoom.
Well, Arfin brings up a good point. I think there's definitely risk there, and it could be what's influencing Zoom. But I think it goes deeper than that, and that's what we were talking about, how the hybrid approach, the work-from-home approach isn't going away. And we've talked about how Zoom gave away a lot of their services for schools and medical healthcare institutions, and now they're ready to cash in. If you're a school or a healthcare institution that's been using this and now you love the product, you're more than happy to pay for it. So Zoom gets to cash in on that. It was a brilliant move during the pandemic. Obviously, there was, I guess, philanthropic reasons, but it was also a great business move too. Yeah. And so I think that the ability for them to cash on that's going to work wonders for the stock. As far as the Delta variant's concerned, there is some cause for concern there, but what we're seeing, especially like to your point, as far as I guess worry is concerned, Boris Johnson said Delta variant or not, we're going to reopen as scheduled. So it seems to me that people are, making sure they're staying cautious about it, but they're not letting it disrupt anything as far as a reopening is concerned.
Yeah, and so Zoom certainly is a top stock for me. Guys, we talked about Amazon, we talked about FAANG, we talked about Lots, Clover,
all
Zoom,
kinds of stuff.
Everything. And these all show up on our watch list. So if you guys are interested, we send out a free daily watch list of 5 stocks we're watching before the market opens every day. We send that out. If you guys want access to that free daily watch list, go ahead and click the link in our description. But these are all stocks that we're always talking about. We're always looking at. Big C, shout out to Big C. We love Big C.
Yeah.
I do want to answer one question, though. Nate, Funny Pranks Gone Wrong, is tech classified as spec? No, tech isn't. There are tech stocks that are classified as speculative, but there are many tech stocks that are not speculative in nature.
There's actually tech stocks that I would consider value stocks. I mean,
Yeah,
like
yeah.
an IBM is
Intel, yeah.
IBM, Intel, right? So, well, some of the ones that have been around forever, they're the furthest thing from speculative.
I think, like, if you think about it, like Apple, right? Is there a question in your mind whether Apple's going to be around in 20 years?
No.
No.
Right.
But do we know if Palantir is going to be around in 20 years or Snowflake or Lemonade? Like, we don't know. You could think, but there's many examples of stocks historically that, I mean, look at the dot-com bubble. We thought would be around forever, and they're just not staying around forever.
Yeah.
And so especially the younger companies, Drive Shack, hugely speculative, very young company, big growth strategy, but you know, we don't know what's going to happen with Drive Shack. We feel confident about it, but that's a highly, highly speculative stock, and its stock price reflects that.
Yes, absolutely. Guys, that's going to do it for us. We have a special show tomorrow, and we cannot wait to get that kicked off. We have a special guest showing up. No, it's not the crypto guy. Everybody is speculating that it's not. But we have something new that I think you guys are going to like. We're going to have a good time with it. And so make sure you're tuning in tomorrow at 3:30 p.m. as always, because we will be live for that. That's going to do it for our show. Hit the like button on your way out the door as well. If you guys want to be a part of our bigger community within our Chaos crew, hit the join button next to subscribe. You get all kinds of cool stuff, our Discord chat room, access to my portfolio, as well as trade alerts, all that good stuff. Check it out. Hit the join button next to subscribe. Help support the channel. Help support the studio. And, guys, we'll see you tomorrow at 3:30 p.m. Eastern Time.
Here's your clue as to our guest.
Bye. See you guys. Have a good one.